Hey guys, Mike here. So I got another jam-packed video for you, and we'll go over the charts and stuff, but I did want to start off with this right here and saying, this right here to me shows you, again, why the consumer is hanging in there, right? And it's actually good news for a lot of people, as a matter of fact. So I'm going to start off with this, then we'll go into a lot of other stuff about the market and stuff. But this right here shows, and just came out, that most U.S. mortgages are pandemic mortgages, right? So basically over half of them were created in 2020, 2021, and 2022, as you can see by this chart right here. We just outlined that. So of course, what does that mean, right? Especially the 2020 and 2021 mortgages. That means they were financed at low rates. That's why this is important. So check this out. 99% of outstanding mortgages have interest rates below the PMMS, right? And when you look right here, we can see, look at that big spike. The one that's like any of those below, what do you say, 3.5 is a good deal. But look how many are below 3, okay? And let me know in the comments if you're in that group. I know I am. Mine's around 2, so I'm happy. But when you look over here, you know, yeah, it's growing on this side, but nowhere near as much, which means people have much lower payments than, you know, obviously the people that are buying probably what, beginning of 2022 into now. But that's the, I mean, it's over half was created during that time frame, right? So that also gives people a lot of leadway. I mean, if they have to refinance, they can. And God knows I get the calls every day. Let me know in the comments if you do. There's no way. I mean, if you're desperate, you got to do it. But who would voluntarily, just out of the goodness of their heart, triple their interest rate on their mortgage? I mean, that just makes no sense. I mean, I told you the average payment now is like $900 more than what it was if you'd have done it in 2020 and 2021. And not to mention, of course, with the higher prices. But, you know, this is that fallback that, you know, going into like the '08 crash, people didn't have, right? Back then, interest rates were really high. And so we don't have that now. And so that's your biggest expense is your mortgage or your rent, but especially your mortgage, right? And so I don't know, that's why I know a lot of people that also, they locked in like HELOCs and things at a very low interest rate as just in case. And so they got that on the back burner as well if they need it. And so this kind of stuff we hadn't really seen before, right? Now, something else I'm going to talk about is this right here. Look what's setting new highs. Like this is important. And the market might be trying to tell us something, because if you recognize the stocks right here, you will see you get a lot of travel stocks, lodging stocks, casino stocks, steel, auto manufacturing, industrial machinery stocks. You don't see tech stocks on there, right? And so again, they always say there's a bull market somewhere, and one thing that's doing really well is like the European markets, because they're not tech heavy at all, right? And the ones that have very little tech or exposure to tech and a whole lot of industrials is doing well. And that's why they say, we'll have to see. That when you come out of a bear market, you usually get new leadership, right? I come out of '08, it was tech, right? So what is this going to be the industrials this time? We'll have to find out. But if you see, that's what's still making new 52-week highs. I'm still stunned that casinos are still doing that. But again, I don't gamble. I don't pay much attention to them. Congratulations to whoever buys casino stocks, so they're doing well. And the travel stocks are as well. I mean, Airbnb is doing pretty good. Hard rejection day off a certain level, but it's doing well. And so like I said, that's why I keep saying, people hate it when I say it, but we're still traveling. I mean, I see it. I mean, we're still traveling. Are you still traveling? Put it in the comments. You know, and that's what you got to look at. Even though I know the industrial side of the economy, that's what's so kind of crazy, is that's the economic data we get that just is terrible. But it's these industrialized stocks that are making new 52-week highs now. And so that's kind of stunning. But, you know, going into the S&P, you can see today we started off green. And it was actually, I thought, oh boy, we're roaring now. And then it kind of faded out. I think pretty much we know why, which we'll get into in just a minute. But, you know, it's, when you look at it, still, here's that double top SR, right? Sitting around 408. What else sits around 408, 409? Obviously, you got the 22 anchored VWAP. You got the 618 Fibonacci level. So a lot of stuff sitting right there above us is going to act as resistance. But that's what people are looking to see, if they can flip that back into support. That's going to be the big thing. 5-day moving average, curling up right there. When you look at the weekly, though, it's pretty simple. Look at this. Still just sitting in a chop box. That's what we're doing. You're getting these big moves and everything. And the real big question is, obviously, are we going, I would say 3,900. They put 3,800 on here. Or are we going to take the road to the left at 4,200? I still say 4,300. Now, what really surprised me is Mike Wilson, you know him as, at Morgan Stanley, who's one of the biggest bears out there, who really believes the market's going to tank. He actually came out today, which was stunning, and said that the equity market survived a crucial test of support last week that suggests this bear market rally is not coming to an end just yet. And he's talking about the 200-day moving average, which is critical. That's a big thing. Nothing good happens below it. Now, here's something I'm going to read. I gave this to the members this morning, so I'm just going to read it off to make sure you understand this. There's 4 major events coming up here, right? We're going to end the next 13 trading sessions. So it's going to be a very volatile 13 trading sessions coming up here. Obviously, number 1, you got Papa Powell speaking tomorrow and Wednesday. So that's something to keep in mind. And if he says the word disinflation multiple times or pause, you can guarantee you know where the markets are going. He did this last time, said disinflation like 16 times. And every time he said it, the market popped, okay? Then you're going to have February jobs report coming out March 10th. Then we're going to have CPI March 14th, okay? So whether that comes in hot or not, we'll see. We'll see what the new calculations, how it affected that. And then, of course, the big one you're going to have March 22nd will be what they're going to do on interest rates and things like that. 30% chance is what the market's kind of figuring in here, that they're going to do a 50 basis point hike. Again, I'll wait for Nicky Leaks, or whatever his name is, from the Wall Street Journal when he gets fed data to tell us that, and we'll see. And I'll definitely keep you informed if he does that. And guys, if you get anything out of this, please hit that like button. It really does help the channel. And if you're new here and you like this kind of content, think about hitting the subscribe button. I really appreciate it. Now that leads us into some bigger stocks here. Apple, obviously the biggest stock in the market. Hard rejection today, right? In this area right here. You can see right there rejected. You can see it's rejected multiple times in this area right here. And this right here is the hourly. But you can see, obviously got overbought. Shocker there, rejected. Now heading back down. Looks like the MACD's curling over on the hourly. Show the short-term time frame looks bearish. But on the daily, not really. I mean, if you look at it, it looks like the MACD is actually trying to curl up. It's over the 50 on the RSI. 5-day moving average is curling up on that right there. And then going into Tesla, another red day. You would have thought it actually would have been green with some news, which I'll go over in just a second coming out. But one thing Tesla's got to be careful about, you're seeing these lower highs being set each day now. But again, where's it at? It just sits in that chop box, got rejected hard off that 200 area. You got this trend line that's getting rejected off of. Obviously got that big trend line moving down that's been there for months. To see when that gets tested, to see if it rejects off that. I even read something today. If you look at that, some people try to say this is a head and shoulders that's forming on like the 2 hour. I don't really see that, but again, it's all what you want to see and stuff. You can see the RSI obviously trending down at this point in time. If it gets below 50 on the daily, watch out for that. That's for sure. And then if you look at the news, what they did was they cut prices again today. And so, you know, this can be seen as a good thing or a bad thing, right? And so the Model S Next now started at $89,990 and $99,990 in the U.S., right? Down 5.3% and 9.1%. So that's really big. And then another model they cut as well. And when they did this last time, it's kind of weird because the stock popped, right? And so I think people are still trying to figure out, it's like, are you doing this because you can and it's not going to hurt the margins, or are you doing this because demand in the U.S. is waning or something? That's what you really got to look at, and people are going to take it in different ways. And so let me know what you think down in the comments. Now, Meta actually looks really strong. I think a lot of people are really thinking this stock's going to go up and try to break through that trend line right here, which is important because this trend line goes all the way back to 08. And so if it breaks that trend line, which is not too far off from doing it right now, then that is extremely, extremely bullish. Okay, and something else here, if we add in, go back to the daily, and then we add in our moving averages right here, you can see, as I'll scroll back for you, what do you see? I had its first golden cross on Friday where the 50 goes over the 200. And he hadn't had one of those since 2020. If we just kind of scroll back, you'll see what I'm talking about here. Obviously, 2022 was heading down like a meteorite. And then if we keep scrolling back, you'll see right there in 2020, that was the golden cross right there. So it is bullish. Doesn't mean it's going to go straight up or anything like that. But it's not a bearish thing to have a golden cross where your 50 crosses over the 200. And so it's not far off from, it's like the 189 level, 190 level, which is rejected off of multiple times, trying to break that trend line. So that, I don't think that's going to be easy to do, but if it does, that is super, super bullish. And then looking at the economic stuff, the only thing you got to worry about is Fed Chair Powell speaking at 10 a.m. The rest of it's not going to mean anything because the algos will be out in full force. They're going to listen for disinflation, deflation, pauses, all that stuff. Again, I have no idea what questions he's going to be asked or anything. He's a very political man, and so we'll have to see. And again, I always say, watch his tone like I did the last meeting. You're going to know whether or not he's going to try to rein the market in or not. And if he starts throwing the word deflation, disinflation, inflation's coming down really well and good and all this other stuff, and oh yeah, we'll probably pause, like all that stuff, that'll let you know he's not trying to even touch the market. He's letting us do what it wants to do, right? And that's basically what he's doing here. Because again, what are they trying not to do? They're trying not to have any kind of liquidity crisis, right? Especially a credit crisis in the market. That's something. And he sees, I mean, he has access. I've showed you the banking standards, right? Being very restricted and stuff. So he already knows a lot of companies are up against that. A lot of people are up against that while they're continuing to raise rates, and that will get worse, actually not better. Now, I can't wait to hear, hopefully they ask questions about what in the world is going on with the employment market. What are you planning on doing about that? Because they're still rolling the balance sheet off. But I mean, again, employment, I mean, the only thing that's going to solve employment, honestly, is a real, like a moderate recession, right? That's the only way you do it, is for people to lose their jobs. And they just can't go buy, or they start saving and all that stuff. I think that's the only thing you're going to be able to do, because I've showed you the problem with the job market, and the other stuff they can't fix. And Congress is not going to fix immigration anyway, so it doesn't even matter. So, you know, when you got an incompetent government, it's hard to fix these kind of situations. All right, they can't even agree what color the sky is, for crying out loud. They're not going to fix that one. They're going to keep running off that one. And so, you know, that is what it is. Let me know in the comments what you think about that. And if you got a fix for it, let me know. I'm glad to see people working. I'm glad to see people still getting raises. But again, does it help with inflation? Absolutely not. So it is. That's why inflation will stay sticky for quite a while. The big thing is, I'm hearing now is people are saying, well, this might have been a once-off on the inflation data because of the new weights and the new calculation. That's what we'll have to see, right? And we all know if it comes in lower, the market's going to go higher. That's the way it is. If it comes in hotter than expected, you know, the market's not going to react the way a lot of people want it to react. But, you know, anyway, if you got anything out of it, hit the like and subscribe button. I really appreciate it, guys. And I will see you tomorrow after Jerome speaks.